How are we getting on, people? Luke here from LAGFX. We are back today with a new video. In today's video, I'm going to be completing a full top-down analysis on the S&P500. So that's the S&P index. For those of you who might be unsure, this was a video that was actually requested from one of my mentees. So I thought, rather than just providing a personal video to Ewan, why not actually do a full case study video and stick it on YouTube for everyone else. So if you guys do go on and enjoy the video, you learn something from this, please leave some feedback and the video a like. And if you have any questions or queries with regards to this analysis, go ahead and leave a comment below. But with all that being said, people, let's jump straight into today's case study video. So as you all know, first protocol to any top-down analysis is to start on the highest of timeframes and work our way down. This is how we create a story within the markets, and this is how we decipher and get a good understanding on the overall bias of a market and the current bias and structure of the market. So first things first, we take a look and we see, okay, well, this market is quite evidently a bullish one because we have clear bullish structure, right? So I'm just going to mark out our swing points just to make this a bit more obvious, even though I think it's pretty obvious, the structure of this market. But you can see here, we have a impulse followed by a correction followed by an impulse. So now that we have our bias, that gives us a direction to trade in. We should be looking to buy into this market longer term, okay? So now that we have that understanding, we now need to figure out what phase is this market in. Is it in an impulsive wave or is it in a corrective wave? Well, it's pretty obvious, again, that it's in an impulsive wave. So these are our options. We either prepare for the correction, which we can then look to take advantage of. So we can look to short this market before the next impulsive wave. We could look to take part in this current impulsive wave. But how far into this impulsive wave is it? Do we really want to buy in if price may be looking to trade lower in order to pick up more demand? So that is something we need to decide and figure out. So there's two options really. The third one is to basically be patient and wait for A or B. So in order for us to figure out whether price is still within the impulsive wave or if it's looking to go short to correct itself, we need to go down on the lower time frames. So we just get rid of this path, head down to the weekly. We have a look at the current structure of the market more fractally, okay? So again, we have highs and lows. We aren't seeing any breaks in these highs and lows here on the weekly time frame. Now, the last higher time frame low, I would say, is this one here. Price is nowhere near breaking the higher time frame low. So it would suggest to me on the weekly that this is still very much a bullish market. Now, as we go down to the daily timeframes, we can get a better look at the fractal structure and what price is doing on a day-to-day basis. So we can see here that price has recently pulled back into an area of demand. There's obviously some kind of liquidity here, which is causing price to stick and not break below this point. And we've had a big push to the upside. Now you can see here within these last two candles, so the last 2 days of last week, so Thursday and Friday, bearishness has started to be introduced. Why? Because we have a wick here, which suggests the start of Thursday. There's obviously some bearish structure before price traded us higher. It's then closed, so the end of Thursday, there's obviously some more bearishness being introduced, hence why we've had a close here of this candle. Friday's come along, we've started the day off with bearish structure. Price has traded higher. We've ended the day again with bearish structure. So there seems to be a pattern occurring here. So it looks as though price may be slowing down in prep to take a move to the downside before any kind of continuation to the upside. Now, first things first, obviously we want to look at the most relevant higher time frame low, which is this one here. And we need to see if there are any areas in which price may pull back into before trading us higher. So with the bias that this is still a bullish market, which it is, it's very much a bullish market, we don't expect price to break beneath this. So we should be looking anywhere above this point for relevant areas at which price may trade down and into to set a new higher low before trading us higher. So this screams out to me straight away I'm actually going to mark out the entire doji rather than the 2 weeks here. So this would be a relevant area for me. I would say this here, this is a hidden order block. That is another area of interest for myself. And then we have a clear order block as well on this time frame. This would be another area of interest. So there's 3 areas of interest here that we could look to potentially buy into this market from. Because again, this is still very much a bullish market, and there is nothing to suggest that price is going to be bearish longer term. So now that we've marked out potential areas that price can pull back down and into, we need to wait for relevant confirmation that bearish structure is going to be introduced to actually trade us into these areas. So again, now as we go down to the 4-hour timeframes, we're starting to see more red candles, and you can see where price has pulled back, and it seems to be pulling back again. So it's becoming more and more frequent. In order for me to actually take this market short, I would need to see a break in this structural point here, because this is the last protected low within this fractal bullish structure. Now, if price was to break beneath this low, I would then look to take part in potential short positions for a short period of time, maybe riding it down to this first area here of demand that we've got, just as that's a safe haven. Still a brilliant trade could be placed here with an amazing risk to reward ratio, but I think setting our first take profit target there would be a safe bet. Now, again, this is still very much a bullish market. There is nothing to suggest bearish structure at the moment, and as we look here on the 1-hour time frames, there is another order block that price may trade down and into before continuing to trade us higher. So we could actually look to go long from this area here. We would obviously just need to be delivered with a penetration, clear rejection, and some sort of break of structure. So I want to see price trade down like so, trade into this area, rejection to the upside to suggest enough demand has been introduced, breaking the last protected high within the bearish corrective wave. Price then pulls back to set a higher low in the new bullish structure, and price then trades higher. We would get involved at this point here, riding price up. Now, if price is absorbed from this area of demand and we'd have a break in this low here, then that's when I'd be looking to take this market short. So it's important that we get the break of structure we need to suggest longer term bearishness. Once we have that, that is when we can then prepare for our short positions. So the alternative is price breaks to the structure, to the downside, it pulls back to set a lower high, and then it begins to trade us lower. We would get involved at this point. All we need to do is find an area of supply within the impulsive wave that broke the structure, which would be this one here. And that's when we look to take part in the market. So that's actually my thoughts for the S&P 500. There's not too much to it. I think it's just a case of being patient, waiting here for either a penetration and rejection to buy into this market from this area here, or we wait for the break of structure. That gives us the confirmation to then drive the market lower. Now, if you are someone that wants to get involved in this market this coming week, and you're looking maybe on the 1, 15 and 5 minutes, then I would be looking for short positions, because price is going to continue trading us lower, I do believe, whether it trades us into this and rejects, or it breaks structure to the downside and continues trading us lower. So I do think we are going to see some more red candles here on the 1, 4 and daily timeframes. I do believe we are going to see a depreciation in the S&P 500 this week. But whether it's short-lived and we get some rejection from here, or it continues trading us lower, is a completely different story. And for that, we would need to wait for additional confirmation. But if you are looking to take part in this market, potential shorts before deciding a longer-term bias, just keep in mind that this is very much a bullish market. We should be looking to buy into this market with a longer-term bias. However, we delivered with relevant confirmation, shorts may be a wise suggestion. But that's my analysis for the S&P 500. Quite a quick rundown here on this case study, but I think that's all it needed. As I say, we've got our higher time frame bias right the way down to as low as the 1 hour timeframes here, and I've given you my thoughts and predictions for the coming days. As I said at the start of the video, if you guys have any questions or queries with regards to my analysis here today, please leave them in the comments below. And if you have enjoyed, don't forget to leave it a thumbs up. Just want to say a massive thank you for watching, people, and I'll catch you all in the next one.